I want to call to order the County Water Authority's Audit Committee meeting for October 30th, 2025. Nicole, can you please call the roll?
Chair Castaneda.
Here.
Directors Leahy.
Here.
Paul.
Yes,
Scalzetti. Vespi.
Here.
Chair Castaneda, you have a quorum of the committee.
Thank you, Nicole. Appreciate that. Item number 2 is additions. I see that we have no additions being requested, so we can move on. Number 3 is public comment. Are there any members of the public that would wish to address the committee on items contained in this agenda?
Calling on public comment for matters on the ANF agenda, on the audit committee agenda or within the jurisdiction of the committee. You have 3 minutes to make your comments. First speaker, Mr. Javier, you may begin now.
Thank you, sir. I request my wife to have her comment first, Mr. Chair. Okay.
Number 1.
Okay.
I am Purita Javier, senior with existing medical condition and victim of toxicity from ceramics, pottery, hazardous business next door. Number 2, whenever it rains, all are in heaven. We need water to cleanse dust, air, particulates, and contaminants. Number 3, in our community and believably in most of our neighborhood, infrastructure related to conveyance of the second vital survival kit are old and are requiring replacement and even new construction. Number 4, our participation is for learning, teaching, and we suggest a rational action, proactive, as the source of procured water is not only a demand but crisis. Upper basins as well as lower basin of Colorado River are of 3 years subject to drought. Are we ready to protect us? Clear and adequate water for fire fighting, and water cleaning air, land water pollution. Number 5 are simply idea to conserve, an idea to catch or restore and not waste rainwater. Number 6, our immediate short-term infrastructure investment on desalination plant. Number 7, let's copy and improve desert countries do.
Your time is up. Thank you for your comments.
Very timely. Thank God.
Next speaker, Mr. Javier, you may begin now.
We are peace-loving citizens. We don't intend to change our democratic ideology. It's here. In the oath of allegiance, we are just thankful that we are still alive. And in our twilight years, we promise we will join you, helping each other. Something is wrong. Something is wrong. We know that we can never defeat nature. We could only protect us. And one is clean water. We can survive for 1 month without any food, but with clean water. Are we ready? That's a big question. Again, we are peace-loving. We do not want you to be accountable for this if you fail. That's why we are looking at our our elected officials, whom we expect to lead on the right path. We notice that all critical discussions air is led by the city, Mayor Gloria. Water, led by Mr. Nick Serrano from the city of San Diego, the finest city, it says there. Under God, we stand here brave, persuasive, diplomatic. Something is wrong. Are we being destroyed? Are we being divided? It's happening in our community. Old pipings, and actually even our meter was just replaced after 1 year observing whether it is accurately or not, billing money. Under God, we plead, let's work together, not loyalty to a person or group or party. We're only one, humans. And we are gifted with our 10 fingers, with 5 human dimensions. I hope Mr. Serrano's here. I'm not against Mr. Serrano. I like his volunteerism. But the thing is,
Your time is up. Thank you for your comments.
thank God for hearing us.
Thank you, Mr. and Mrs. Javier.
That concludes our in-person requests. If there are public speakers online, please raise your hand through the Zoom app or press *9 if listening by phone. There are none.
Okay, thank you very much. We'll move to the next item. Chair's report, there is none. Item number 5 is the approval of the audit committee minutes.
Move approval.
Okay. We have a motion by Director Paul.
Second.
Second by Director Leahy. Any discussion? Hearing none. Nicole, can you please call the roll?
Chair Castaneda,
Yes.
Directors Leahy,
Yes.
Yes, approve.
Vespy.
And I'm going to abstain.
The minutes passed.
Great, thank you. Consent calendar, no consent. Items listed, action, discussion, presentation, 4 items. Under action, discussion, presentation. Number 1 is Shannon Ayala, CPA of Davis Farr LLP. We'll kick things off with a report on the results of the fiscal 2025 audit. Are there any questions or comments? I'm not sure whether or not this is the point where she makes.
You can hand it over.
Ready? Okay. Shannon?
Okay. Yep. Good morning. Can
Good
everyone
morning.
hear me okay? Yeah. Okay. Would you like me to share my screen, or is somebody going to, is it already being shared?
It's being shared.
Okay. Okay, great. As mentioned, I'm here to share on the results for the audit for the San Diego County Water Authority for the fiscal year ended June 30, 2025. If you could go to the next slide, please. just go ahead and tap twice. So both, thank you. We performed our audit procedures in August, at the end of August, and wrapped up in September. And as a result, we issued an unmodified opinion dated September 26, 2025 on the financial statements. That states that they are fairly presented in all material respects in accordance with generally accepted accounting principles. You will note there was one paragraph in the audit opinion, an emphasis of matter for the implementation of the new accounting standard, GASB Statement Number 101. This is related to compensated absences. It did also result in a prior period adjustment. However, our opinion is not modified with respect to the matter. And then we also issue the communication to those in governance letter and the government auditing standards opinion. The communication to those in governance letter is the wrap-up letter of the audit. It indicates the significant audit areas that we had identified during the year and performed additional testing, in which I'll talk about shortly. And then it also identifies any significant accounting estimates as well as footnote disclosures. And then the government auditing standards opinion is the internal control letter. I'll also talk about that on the next slide. So with that, if you could go to the next slide, please. Just tab maybe 3 times so that they all come up. So our standard audit approach is to substantively test all material asset and liability accounts and then analytically test material revenues and expenses. This year, our materiality was 2% of revenue, which amounted to approximately $14 million. Our significant risks identified during the planning stages of the audit were the implementation of GASB 101 for compensated absences. So we obtained the Water Authority's calculation as of fiscal year ending 2024 and ensured that the adjustments made were done in accordance with the accounting standard. This did result in an additional liability as leave that is not paid out upon termination or separation from the Water Authority, but is more likely than not to be used, has to be accrued, as well as the taxes related to the compensated absences. And as I mentioned, it did result in a prior period adjustment in accordance with the standard. And then we tested capital assets and construction in progress. So we tested approximately 66% of the outstanding projects in construction in progress to ensure that they would result in an asset to the Water Authority and that they were still properly recorded as CIP at the end of the year. And lastly, we are required to do an element of unpredictability as part of our testing each year. And this year we did review specifically the expenses related to fleet and safety supply. So we made a selection of disbursements judgmentally. We reviewed 10 additional expenses and tested them to ensure that they were properly recorded. They were in fact for fleet and safety supplies, and that they were also properly supported by the invoice and additional supporting documentation. We didn't have any exceptions noted as a result of any of our areas of audit focus. Next slide, please. And then feel free, 3 times. Okay. Chris and Gina and all of the finance staff were very prepared for the audit and responsive to our inquiries. As a result, we were able to efficiently complete the audit and I think issue our audit opinion the fastest that has been done in the past maybe 8 years or so. We did have one immaterial reclassifying journal entry as a result of our audit procedures, and this moved some expenses out of non-operating expense and into operating expense. And then we didn't have any instances of non-compliance identified. We had no material weaknesses or significant deficiencies in internal controls identified. And then next slide, please. I do want to point out that next year the Water Authority will be required to implement GASB Statement Number 103, which is improvements to financial reporting. The primary item from this accounting standard that will affect the Water Authority is it clearly defines what can be considered a non-operating revenue and a non-operating expense. So it will require the Water Authority to look at the items that are currently being reported there, and if they don't fall under one of the defined items, then they automatically are reported as operating expenses. And we will be evaluating that with Chris, Gina, and the team next year during interim. And you will notice some differences in the financial statements next year. And then it also clearly defines what information is to be reported in the management's discussion and analysis. And the hope is to avoid duplicate language, boilerplate discussions, and make the primary focus why things changed in the financial statements and not just that they changed.
Oh, Shannon,
Yeah.
if I can interrupt, I just wanted Chris to talk about how the standard 103 is going to impact our coverage ratio calculation.
Okay.
Thank you. Good morning. I'm Chris Wojcik, the controller in the finance department. Yes, GASB 103 is going to have an effect on the Water Authority, and quite frankly, a lot of governmental agencies, especially special districts, depending on how they're reporting their revenues and expenses. Now, we've already done a look at this. We're going to be adopting the standard in fiscal year 26, as Shannon had mentioned. And it's going to require us to move some of the expenses and revenues that were in the non-operating section up into the operating section. By virtue of that, that will affect the calculation for the debt service coverage. And we don't really think it will be a material effect, actually, but there's going to be some additional revenues and expenses. Our plan of attack for that is we're going to actually be pro forma-ing the fiscal year 2025 financial statements that you see here in the next month and get a look at what that would look like and see what that calculation would yield in terms of the ratio against this current year that we just completed to see what any type of effect there would be. Again, we don't think it is very material, but it is something important, as Shannon had mentioned, and it's something that we're going to actually review with the audit committee and walk you through that so you have an idea on what is happening and why. But it is something that we have planned for and we'll be moving forward on.
Thank you, Chris.
So can I ask a question about that? Go ahead. So when would we know the extent of that? You know, you said you don't think it's going to be material. When do you think you could let us know what it will?
Thank you. Truly, within a month. I mean, we were certainly going to review it with the audit committee at the first meeting next year, which would be April. However, we need to do an advanced look at that ourselves anyways. We're very curious. So I think within the next few weeks, we'll have completed that internally.
But just to clarify, this is a future requirement
right,
that does not
understand.
impact the report that's in front of the committee.
Right. No, I understand. But if he's going to look at what the impact will be, it would be great to know that and not have to wait till next year to know that. And so you could bring that to the audit committee sooner than April or present it to the board or something?
Well, we're actually going to walk through it at the next audit committee meeting, the actual what changed. And but we internally want to have an idea in advance, so that's why we're going to be going through it. But we have a plan for it. It'll be certainly reviewed internally, and I guess I'll defer to Lisa Marie on what the results will be and when.
Can I just make a recommendation? I know it doesn't impact now, but I would just, if you're anticipating this change to the coverage ratio, it may be a good idea to present it to the board as soon as possible that you're anticipating this, just so it doesn't come up in rate conversations later that something changed that coverage ratio and it seems like a last minute thing. So maybe just part of the long range financial plan or something that could be presented to the board that this is a new change to our procedures and how it may or may not affect anything.
Yeah, we're planning to provide the board a financial update per the board direction in February, so we'll give that update then.
Anyone else?
Okay.
Shannon, go ahead.
Okay, that's it for me. I think the next slide is my question slide. So if anyone has any questions for me, sounds like a perfect time for that.
Okay, thank you. Any questions from the committee on the presentation that we just got? Director Paul.
Yes, thank you. So I was volunteered by the chair to meet with the auditors, and so I already got a chance to talk with her a week or so ago, and so I have no other questions. Thank you.
As I did as well. Nope. Okay.
Okay.
Thank you very much, Shannon. I appreciate it.
Thank you very much, and thank you for your flexibility.
Okay, you're gonna hang on with us for a few minutes, right?
Okay.
Just in case there are questions
Sure
that
thing.
drift into your area. Thank you.
Yep.
All right. Thank you. Okay. Next is Chris Wojcik, Controller, review the audited comprehensive financial report for the year ending June 30th, 2025. Chris?
Okay. Thank you, Chair Castaneda. If you go to the next slide. Okay, so our task this morning, we're going to recap the activities completed since the last audit committee meeting. We're going to cover the streamlining efforts of the audit process. We think that'll be something that'll be interesting for the committee to hear. We're going to talk briefly on the fiscal year 2025 financial results, and then we're going to go over the next steps to conclude the business of the audit committee. Okay, next slide. Okay, so recapping the activity. So this is the third and final audit committee meeting for the audit committee. The last meeting was in mid-September. Since then, the audit has been completed. It was actually completed the quickest we've ever been able to complete it, thanks with much appreciation to staff. The ACFR document, which stands for Annual Comprehensive Financial Report, that document has also been completed. It has been provided to the audit committee members for their review. We appreciate the time that they put into in reading it, the document. In particular, Director Paul submitted questions in writing, which we've replied to and given responses and shared that with the committee. Today, there's still opportunity to ask questions on the ACFR and the audit as well. Now, we also provided the ACFR to the full board, and they've had it for about 2 weeks. We've not received any questions or comments from any of the board members. Now, one of the requirements of the committee is for a subpanel of the committee, which Chair Castaneda and Director Paul represented, to meet with the audit partner and have a meeting without management being present. As Director Paul and Chair Castaneda mentioned, they did complete that meeting, so that is a requirement of the committee, and that has also been met. Okay, next slide. Okay, moving forward onto streamlining of the audit process, we wanted to make you aware of staff's efforts to complete the audit sooner and produce the document, the ACFR document, quicker. And this year, we were able to complete it in under 90 days. It has been a work in process for a number of years. It's not something you can make a change in a single year or two. You have a lot of new GASBs or accounting rules that are issued that we have to comply with. You have staff turnover. It's just something not easily completed. But we kept working at it, trying new ideas, listening to staff, speaking to our auditors and getting input and refining the process. And this year, and we've been slowly trickling, ticking off on the number of days it takes to complete that. And we're actually under 90 days. And it really falls to the audit opinion. That's when we say we're done, is when the auditors give the opinion. And we're always very curious about what that date is internally, because that represents the completion. So again, I want to thank Gina and Wendy and their staff in making us be able to complete this much quicker. It wouldn't have been able to happen without them. So just quickly, in order to do that, we looked at the whole audit process. The auditors will come in twice a year, an interim phase in April or May, and then a year-end phase in August and September. And we really utilize their when they come in during the interim phase and give a lot of financial information to them, any unique transactions, any changes in the agency, so they can see those and digest those, so they don't have to focus on them at year end. And it involves them a lot quicker in understanding what the agency has completed. We have a comprehensive task management list, which Gina is very good at making sure everything is all-inclusive to complete the audit and the ACFR document. We have staff that own all their work in the document itself. Oftentimes, they'll complete a schedule, and then it pertains to something else in the AFTRA document, and they actually take ownership and complete that information all the way through, update it all the way through, which is something that's invaluable. We have a lot of training that we've given to staff and cross-training so that if someone's falling behind, another person can step in. That's a great testament to Gina and Wendy. We optimize the audit support. We work with our auditors to get guidance from them. We don't necessarily interpret things the correct way, let's say. They have a lot of exposure to a lot of clients, and they understand how a new pronouncement is being interpreted or applied. So we do consult with them a lot and receive input from them. And from all of that, we're able to complete the audit much quicker in the AFTRA documents. So the benefits to that, it expedites the audit, allowing staff to return to their normal work duties, right, which is what we want. It enhances staff skills, and through cross-training, makes them more valuable, if you will, and being able to promote upward internally. It identifies key insights and opportunities for the future to improve. We have post-mortem or after-action, if you will, meetings with the staff to see how the audit went, and we learn from that. We make changes based on that. And actually, the audit fee is even lower. Because we have the audit so much quicker, the audit fee is even lower. So that's another great benefit to streamlining the audit process.
And Chris is very proud of himself.
And the staff. Okay, thank you. And then, thank you. We'll go on to the next slide. Now, we'll talk about the fiscal year 25 financial results. Now, we understand you've already had the ACFR, you've already reviewed that, and also this information is included in the controller's report. We issued the June controller's report. That speaks to the activity, the expenses, and revenues of the agency. So we understand that you're already aware of that. So we're going to speak at a rather high level today and briefly. And within the ACFR document, focusing on really two areas, the transmittal letter, which is up front, that really speaks to the accomplishments and major initiatives of the agency that happened during the past year. And then the management's discussion and analysis, the MD&A, that really recaps all the financial results and significant transactions for the agency. Now, the Water Authority, our revenues and expenses are rather typical. I mean, we're in the business of selling water. We're not like a city or a county. We don't provide a lot of different services. So again, our revenues and expenses are rather predictable. They don't really vary too much from year to year. So with that in mind, I will just quickly go over some of the key results. So our net position this past year increased by $113 million. $36 million of that represented the net increase in capital assets. We had a $59 million increase, and this is from last year, in restricted assets, and that was really from moving monies into the PAYGO fund to fund the capital improvement program. As you know, the 2022A bonds have now been fully expended, so it's actually capacity charges and if we need money from the operating fund, that will be funding the CIP program until the next debt issuance. We had an $18 million increase in unrestricted net position. That's favorable. Again, that's just the change, the difference between all the other assets and liabilities, if you will. And then we did want to point out there was a $2 million decrease overall in cash and investments. The board has been paying particular attention to our cash and investments balances, making sure that we're not growing reserves unnecessarily and using reserves to mitigate rates. So we wanted to share that the change in our cash position. Now, with respect to changes in net position, our operating revenues were higher due to water sales by $110 million. And again, that's reflective of the rate increase from the board passed a year ago, as well as we sold an additional 29,000 acre feet this past year. In the past, we had 2 years of wet weather we were working through, as well as our member agencies working through their local supply, and now kind of balancing out, normalizing, if you will, in terms of water purchases from the member agencies. Our non-operating revenues and capital contributions were otherwise flat for the year. There was really just a minor $2 million increase in that category, but again, rather predictable in total. For our operating expenses, those were higher by $44 million. And again, that relates to the inflationary costs dealing with not only our CIP program, but also the purchase and treatment and sale, delivery of the water. And then one particular item of note in the non-operating categories where our grants program really saw a drop in revenue, and that was because a number of projects, 7 projects in fact, actually were completed in the prior year, and those projects had been started pre-pandemic. And we know that the local project sponsors as well as the Water Authority are very happy those are completed. And of course, all the revenues and expenses for those programs run through the Water Authority's books, but our expenses are down because of that. And then lastly, we did want to say that we had a $55 million operating income this year, reversing the trend of 5-year operating losses. In the past, our operating income has suffered because of reduced water sales, as I had mentioned, as well as the board's decision to subsidize rate increases with cash reserves. Okay, now just quickly talk about major significant transactions during the year. We reduced debt. We paid $67 million worth of principal in the year, so reduced our long-term debt position by 3.8%. As I said, we used up all of the remaining proceeds of the 2022A bond proceeds, and we're going to be looking to go to market at the end of fiscal year 26 on a new debt issuance. There was a $36 million decrease in water inventory. We dropped water. The prior year, we bulked up on water, really due to seasonal demands based on shutdowns. So we had to increase our water position, but we were able to make our way through that and sell that water in fiscal year 25, as well as the board's approval of the reduction in the carryover storage. We went down from 70,000 acre feet down to 40,000 acre feet. We had our second $39 million was received from the System Conservation Implementation Agreement reimbursement, which was an agreement between the Water Authority and the Imperial Irrigation District and Metropolitan Water District, with funding coming from the Bureau of Reclamation, which allowed another 50,000 acre feet of water to be conserved in the Colorado River. There, we did receive a $15.8 million exit fee from the Rainbow Municipal Water District. That did happen this fiscal year. And we received about $500,000 in other revenue from both Rainbow and Fallbrook for assets that they purchased from the Water Authority that were no longer going to be needed. There was the $32 million pilot program that represented the fixed charges prepayment. There were 4 agencies that took advantage of that, and that was a $32 million that we received from that. And then, as Shannon had mentioned earlier, we had a $3.8 million adjustment to compensated absences liability. And again, our liability increased for the equivalent of the employer taxes as well as sick time. We were previously accruing 50% of sick time, and after doing analysis on that, it was determined that a lot of the sick time is either being used or actually being paid out by long-term employees. So we had to increase that percentage up, which resulted in that adjustment. And we're happy to report that we did not have to have a single audit this year. We will have to do one. It will be in fiscal year 26, and it will be tied to the DSAL grant proceeds when we receive those. And then lastly, we just wanted to mention that we have received $57 million in grant and state and federal monies from many different sources or many different purposes, and those are based on pursuits of Water Authority and certainly following through on the Affordability Initiative. And we just wanted to make sure that we shared the total that we've received this past fiscal year in those other sources. And that concludes the comments on the financial results. And then the next step, this really speaks to the next item on the agenda, Chair Castaneda. But if there are any questions, we'd be happy to answer.
Any questions, Director Leahy?
Just on the $57 million in grants, that was just awarded in last fiscal year 25? Or were those what was used in that fiscal year?
All it was received in fiscal year, but it's not just grants, if you will. This is money from all federal or state sources, like the BABS income. That's a big chunk of money that we received, but just received in fiscal year 25.
Perfect, thank you.
I have a question also along those lines. So what's tangible in terms of the affordability benefit that we received from the 57?
Well, what's tangible is, I'm sorry.
That's all. Go ahead, please.
Oh, no. Well, the receipt, the pursuit of additional revenue from external sources is something that helps us pay for our expenses of the agency. So
Okay.
if we didn't receive those monies, then those expenses would need to be covered, if you will, by rates potentially. So
They went into the big bag and just sort of, okay. So is there any other questions from Director Paul?
Well, I have another question to follow up on what you're.
Yeah, because I guess from my perspective, as you know, when we're the audit committee, we're not here to talk about how the money's there and why it's there and why it's not there. I don't really have any issue with the bookkeeping and so forth. I had a lot of issues with respect to policy on how we ended up and a lot of the charges that we have. This is not the venue for that because this is not a policy committee. This is an audit review committee. So I'm going to keep that for when we start talking about budgets and rates. So, Director Paul.
Okay, thank you. I can't help myself.
Okay, go ahead.
So when you talk about the 57 million and we talk about budgeting, we don't budget for grants. And so we're up 55 million, but without the grants, we'd be -2. And I just want to point that out, that in my opinion, we should anticipate grants and they should be part of the budget. Although and then in that case, we might have a problem this time. Somehow we're up 55 million, and I would think we planned on that because we planned on putting the reserve money back in, yet the only way we did that was have the stuff that's off budget to accomplish that.
If I can clarify,
Sure.
the BAB subsidy is expected and planned and budgeted for. So Chris just put all federal, state sources in a lump sum, and so that's not counted as additional money. That subsidy is required and needed to pay off the BAB subsidy, or the BAB bonds. So maybe Chris in the future should separate that out.
And then I did have one other
Sure.
item. So I did send in, I guess, 9 items, and thank you for the response. There's one item, though, number 7, that it's kind of disconcerting, and that is about bonds that will pay off in 2028, that we're not going to pay them off according to this, that we're going to pay off some of them, but we're just going to restructure them. So when people look at our long-term debt and they see it falling off, they think 2028, all that debt's going to fall off, but it looks like half of it's going to just get rolled over. So that's just a little disconcerting.
Well, that's the way the bonds were structured, but I did talk to Chris about in the future, he should put at least a narrative or a footnote to note that short-term bonds will be restructured, and it's not like if you have a 10-year note, you're not going to pay it off all in 1 year. It would be restructured over a period of time. But we do have a plan in the long-range financing plan that shows how we're paying off the short-term debt.
Anyone else?
Yeah, could I just ask a follow-up on that? So the charts that we look at repetitively in kind of the long-range financing discussion, right, that shows the debt stack, how does this debt show in that chart?
It shows up in the short-term bucket, and I know on the last presentation we gave us like the top gray bars.
Got it.
Mm-hmm. They added it in the last.
Okay, cool. Sorry, I wasn't there last meeting, but all right.
You won't be there ever again.
Yeah, exactly.
All right. Any other questions and so forth? You could, Chris, any final words on your presentation? Okay, thank you. Next item is for the committee to accept and authorize the chair of the audit committee, which is me, to transmit, and that's actually you that will physically transmit it. The act for fiscal year ended June 30th, 2025 to the Board of Directors. Any questions or comments on that particular item? No? Can I get a motion to approve?
Move approval.
Okay.
Second, Leahy.
Okay, I got all this power now, so, okay. Yeah, thank you. Can you please call a roll, Nicole, please?
Chair Castaneda,
Yes.
Directors Leahy,
Yes.
Paul,
Yes, approve.
Besby.
Yep.
Okay, great, thank you.
Passes.
Chair Cassidy, if I can just add that at the formal board in November, Chris will help prepare you a report that you'll give out to the board. So
Okay.
it won't be a part of ANF, it'll be a part of formal board.
Wonderful. Okay, thank you very much. Thank you, Lisa Marie. Let's see. Item passes. For the last item, Chris Wojcik will discuss the audit committee annual report and process the complete. So was that what we just heard? You go ahead, Chris.
So thank you again. Yes, now the final piece of business for the committee is the annual report that's produced, which summarizes the actions that were taken by the committee. And that will be, we can't prepare that in advance. This meeting has to conclude first, and then we will be writing that up. And we'll be sending it out to the full committee so you can see and provide any edits that you wish. And then that will be presented by the chair to the, thank you, Lisa Marie, to the formal board. As well as presentation of the ACFR document itself for the board to receive and file at the November board meeting.
Wonderful. Thank you. Any questions or comments on that process? Nope. All right. We have no information items. Unless anybody has anything else, we want to go ahead and adjourn this meeting, and we'll move to the full board.
Well, can I make a few comments? I'd just like to thank Director Leahy and Director Vespi for participating in the audit committee, and I wish you the best of luck on your next journey.
They're short timers. That's right. That's it. Okay. Thank you very much. Meeting adjourned.
Thank you, Chair.
Thank you.